Now, I want you to look at this hourly chart and think about day of the week, weekly profile, and key turning points, key highs and lows. Here's Monday's trading. We trade down. Tuesday makes the low of the week, so it changes gears, goes higher. And then on Wednesday, what happens? We see it trade up into the gap on the daily chart. And then on Thursday, we are assuming it could potentially go higher into that completion of the daily volume imbalance premium high. But look what it does immediately after midnight on Thursday. It breaks lower. Now, what is the rules for Thursday? Generally, Thursday at 7 a.m. to 10 a.m. can classically cap the weekly range. So in other words, if we're seeing the low form here on Tuesday, which is what you learn here, if you're bullish on the week 70% of the time, Tuesday will create the low of the week. Well, here we go. So it creates the low of the week. It rallies. We're bullish. We're looking for higher prices. And then we anticipate continuation on Thursday. That's our analysis. But we have to use what information is given to us by IPDA. So IPDA does what? It reprices at midnight on Thursday aggressively. Now, are you buying anything down in here yet? No. We would rather see something like it rally up, create a fair value gap, come back down, and then run to the completion of that premium array or volume imbalance premium high. This shows us that it's immediately repricing lower. It breaks this short-term low and it breaks this low here. So we take out Wednesday's low. Well, how's that translate into the weekly range idea of Thursday? We can't be a buyer in Thursday because it's already breaking market structure after creating a run into a premium array. And Thursday is generally likely to cap the week. In other words, put the opposite end of the daily range in. Now, if we break down overnight, like we're seeing here, this is many times, 80% of the time, canceling out a higher run on Wednesday, and then Wednesday becomes the high of the week. So the weekly profile is consolidation, low of the week on Tuesday, rallies Wednesday, break in structure, be a short seller on Friday. Assuming you have range opportunities over here to work with. And we'll, again, counsel you to go back through the video and you'll see those things I just discussed. But we have no real bullish scenario here because we're breaking structure and no imbalances are there. So if it's going lower and we're doing it ahead of New York, we can't be a buyer in New York, and we naturally revert back to Wednesday's now probably the weekly high. So sit on your hands, wait till Friday, and see if you can get a short using the breaker and all the things I've outlined in this teaching. There's your turning points there without any graphic annotations. And you can see the turning point here and the turning point here. Now, we were looking for a run up into here, but we were allowing for Thursday to give us more upside. And it immediately gives us this. This is telling in the marketplace that it's not likely to do that. And we have a break in market structure. Go back to the breaker logic, and there it is for Friday.